Interest rates, rent, and inflation, they're all skyrocketing. What's gonna happen to the real estate industry, and how can you protect yourself? Stay tuned to find out. Hey, if you're a homeowner, an investor, or interested in buying property here in South Louisiana, we've got all the data that you need. Hi, I'm Jim Cady with Cady Real Estate, and this is your market update. So, real estate prices are a function of supply and demand, right? And months of inventory is how we keep a pulse on what's happening with supply and demand. Looking at our inventory going all the way back to 2012, you can see that we've hovered around 5 and 6 months of inventory, which would be considered a balanced market. Starting in 2020, we've experienced well below average inventory levels and have reported inventory levels to be under 5 months of inventory. This lack of supply of our inventory has created a seller's market, and the average price in January 2022 has increased from $244,000 to $265,000. That's a 9% increase year over year. So where are we going? I'm glad that you asked. Well, going back to 2012, we've experienced a moderate appreciation of 2.85%. This is well below the national average at 4.14. So I do not believe that we are in a bubble. Actually, with the impact of inflation, the experts believe that prices will most likely continue to rise over the next few years and beyond. As an example, if we continue to experience appreciation at 2.85% over the next 20 years, our average price will be at $440,000. But if we follow the national average appreciation in 2044, our average price will be over $595,000. So let's take a look at the next graph from the Home Price Expectation Survey. I think this gives you a very good picture as to where home prices will be according to the experts. So what are we looking at? The most optimistic experts say that we could see a 62.5% appreciation by the year 2026. The pessimists say 23.7%. And when we average all the predictions together, we get 43.3% appreciation by 2026. So, as you can see, all signs point to prices continuing to rise in the long term. Home ownership is really a hedge against inflation because, as you can see in this slide, over the past 5 decades, home prices have increased faster than inflation. That means someone buying a home today can lock in today's costs, protect themselves against rising costs of inflation, and lock in that monthly payment going forward. So it becomes mission critical for renters to understand this dynamic of buying now if they can. Renters take on an additional risk by waiting to buy. Most experts are forecasting higher interest rates, higher home values, and if you look at the rental market going all the way back to 1988, rent has only continued to increase with no signs of slowing down. So at the end of the day, waiting to buy will cost you much, much more money. I hope you found this information valuable. If you're interested in buying or selling real estate, I would love to help. Stay tuned for next week when I'm going to break down pendings, foreclosures, and interest rates. I'm Jim Cady with Cady Real Estate. Thanks for watching.